Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Steve Woodcock, who is Head of Risk at TERA Europe. How are you today, Steve?
I'm very well, thank you, Matt.
Well, thank you very much for coming on to the show. We're going to talk FX this morning. Just talk us through, we were talking about off air, just the volumes that we're seeing going through in the markets. And previously, sometimes when the institutional buyers and sellers step away from the market, really there isn't much volatility, or there is a lot of volatility and there isn't much volume. However, over the years, that has changed, and you were mentioning the retail side of the business.
Yeah, I think the last couple of years, we seem to have seen a change in the patterns. We usually during obviously the summer months, which obviously everyone knows of, and then the lead up to Christmas, we get a quietening down of the markets. But we seem to be getting still movement, still volume. And like I say, I think it is a lot to do now with the retail market, which I don't know what the percentages are now, but there are a lot of retail traders are extremely active, put it that way, and I think that's the reason why. I think there's a lot of depth in that retail market now. When it was initially came around sort of 15 years ago, whatever it was now, people like, oh, that's the retail market. That's not. But it's a sizable market now, and it has to be. Well, I mean, everyone's in that space now. The big banks are doing it, and everyone's involved somewhere along the line. So it's grown massively, and can be an indicative market as well, because obviously independent traders sometimes have a lot of information, and yes. You can sometimes gain a little bit of an edge by looking at some of the stuff that's going on there as well. So it's much bigger than it was.
And just briefly, the institutions. Is there a herd mentality with institutions? Will a lot of institutions follow each other, whereas maybe retail investors, albeit they'll be doing their technical homework, are more independent? Do you think there's a mix?
I'm not sure if what you've got. There are certain traders, whether they be institutional or retail, that work at it. I mean, I do. I work very hard at what I do. I'm just constantly busy. My wife will say to me, "Oh, well, you're busy today." Well, and every day I just say, "Well, but I'm always busy."
Yeah.
Whether the market's moving or not. If the market isn't moving, then I'm looking at the charts. I'm trying to find things out. I'm trying to get that edge. Yeah, the thing is, I think the difference as well is going back at the beginning of my career, you had like different tiers of banks. You had, obviously you had your investment banks and you had the funds and stuff like that. But pure bankers or a foreign exchange desk in a bank, which when I started there must have been 500 banks or something like that, 1,000 maybe, that were trading on my desk or through my desk, and whereas what they all got sort of amalgamated virtually with each other, and you had the big banks buying the smaller banks. You didn't get the second tier anymore. There were plenty of places to do business. And I don't think it's any one sector is a herd mentality. I think the market itself tends to, these days everyone seems to trade off a system. Very few people like myself trade through gut feel, manual chart work and stuff like that. Because everyone's trading off a system, the systems take all the same information, and they generally come up with the same answer.
Yeah, sometimes right, sometimes wrong.
That's right. Yeah, and I think that there generally is a herd mentality, but there's a few people that, I mean, I generally trade against the market anyway. It's just my mentality, and it's actually through life that's virtually what I'm like as well. Yeah, I'm a bit against everybody, if you like. And but no, the markets are moving. There's chances there. That's all we want, movement, and you can if you can make money out of it, happy days.
Fantastic. And let's look at a couple of charts that you manually look at, and probably more with a medium to long-term view, maybe.
Yeah,
we can look at that with the euro-dollar starting off with.
Yeah, I mean, we're basically, I've said it on here before, when we were down at that 105, 106, everyone's call was parity. Yes. Yeah, and, I think it's going, much lower than that eventually anyway. But the trouble was, what happened was, when we got to that 105, 106, everyone and his brother, it's going to parity. You couldn't find a buyer for it, yeah, which then, like I say, for me, that's, well, it's only going one way then. And sure enough, where are we now? We're up at these, 120, and what we've had up at the 120 area, all right, we're 117 now, but the 120 area, we then get the Europeans saying that, oh, it's, it's a little bit too expensive up here, and it's too strong, and so verbal intervention from European bankers and politicians, and that's why we see that sort of the roll over top that we've got there. But with the 116.5, that area is the natural support for it, and it's going to be very important. And but like you say, it's a longer term view. I mean, if you bring that chart, right out, it's really, in the course of the year, we're probably going to end up, pretty much sideways. That's what the charts look like at the moment, apart from cable, obviously, because we had that, the referendum and stuff like that. But no, the Euro chart, if you look at that, if you were on the trend, brilliant. And, you should, that 120, psychologically, and you sort of got a bit of a nod from the central banks that they didn't really like it there. Hindsight, obviously, but the chart, if you were on the trend, the chart traded very well.
And if you were looking at the year, you start the year going long the euro. Here we are in October. Do you call it a day? Cash in?
Well, do you know what? You've actually bang on the nail. Actually, you'd have that. Like I say, you were getting signals there that maybe they don't like it up here, but you're coming down towards this 116.5 level. I think what I would do now, I would be. It's a bit early in the year to say, right, that's it, I'm done for the year. But I'm certainly thinking to myself here, well, you're around these levels now, you've probably squared up, and you're looking to see what it does at 116 and a bit, that's the way I'm looking anyway.
Understood. And another great currency pair, the Great British Pound versus the US dollar. Just talk us through this. Where can we go from here?
Well, I think the first thing to point out there is that the actual the actual size of the moves within that chart, which is typical cable. Yeah, and obviously we had the referendum going back, and we've had news from sterling. But I think the last time I was on here, we were actually where we are now. I think we're about 131 and a half.
Yep.
And I said if it gets to 135, ish. I'm going to sell my house and sell sterling. Well, we're back to 132, and it worked.
Yes.
But we're back into a sort of. Sterling has performed extremely well, considering what's been thrown at it. Yeah, and to think we've come up from what that day I can't remember the level it went down. I think there was like a 113 and something print or something like that.
Yes.
But obviously the real lows were about 119 and a bit.
Yeah, the 119 level.
And then we've been up to 136 and a bit. And that's fantastic. What a great move throughout the last 18 months. Real nice. And also, like I say, within that time period, there's been some moves there that have really, you've had 500-600 point moves, and which is, off the top at the moment, we've got probably 500 and or 400, and look to see if that breaks that uptrend, and maybe, I know everyone's view that sterling is going to be, down. I've seen calls end of the year down at sort of 122s, 3s and stuff like that, which I think is pushing it a bit, but probably 126 and a half, that could possibly be. But at the moment, like I say, even though loads of stuff has been thrown at sterling, if you was looking at it purely as a technical trader now, you're looking at that chart thinking, well, actually, we're back at the previous high. You get long again now, and maybe look for another try for the, at least 133 and a half, 134.
Fantastic. Well, on that note, lots to think about, and lots to take away, potentially trade. Steve Woodcock, thanks very much for joining us.
Thank you, Matt.